Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic day. Happy Monday to you and your family. We're looking, of course, at Bitcoin here once more and helping understand what happened. Essentially, because again, we had the weekend going sideways for a while, and of course, the price action continued to break down late into the evening yesterday. So that's a pretty common thing. It's kind of a liquidity grab where the stops are all hit. They push the price down as low as they can go, and then of course drive it back up once they've got a better position. So this is very standard stuff. It's not really a surprise, which is the reason why I have a bear market strategy, obviously. So if you're a current community member, just know that the system works. Hold on tight, or just fine. But on the same accord, we want to understand roughly what this looks like. This doji candle is forming fairly well on the 4-hour. We're going to look at some larger time frames and kind of redraw out some Fibonacci retracement levels too, just kind of get perspective on where we're heading. Okay. So if you are new to the channel, just know I love teaching people how to trade. If you want to become a better trader, CryptoCache.tech is a website. I provide you with trading academy, signals, and amazing community that all bands together. So keep in mind, they're all doing very well right now. SAC's taking some decent profit from REN and KNC. And we just have this area here where we all have our trade results and kind of just talk about the success, right? Because obviously there's a lot of failure that comes with it, but if you learn from that, these successful things happen more often. Blessed Acres, again, this guy's really come around after the last couple months, killing it to the downside on some short positions. So again, just really cool stuff that comes with the community. We have some signals as well. Also, of course, where I just share my signals that I send out, my trades that I'm taking essentially, and you can benefit from that if you'd like. I do have an average about 80% success rate. Occasionally some things will happen. They don't go the way we want, but you bounce back and you recover, right? That's the important thing. Very last thing, of course, as well is my prize pool, $10,000 per month through Bitget. You'd be instantly eligible for that if you use the link in the description below to register and just start using the exchange. I tell you, it's my favorite exchange of all time, best exchange you could possibly use at this point. So just note that that is the case. And that's kind of where we're at there. So let's take a look here at Bitcoin. Let's do this here thing. Let's do this first, of course, because obviously this ascending type of pattern, this breakout that should have occurred up to the upside is essentially invalidated. But we don't want to worry yourselves too much about that because we are seeing some positivity to the downside here. I'll explain more about that in a moment. Let's go ahead and redraw out some Fibonacci retracement levels just so you can kind of see what's going on. What we'll do is we'll just take the most recent high and most recent low and effectively see where that puts us. Okay. So keep in mind when you redraw out Fibonacci retracement levels, you want to kind of wait until you have a new high and a new low. Okay, so again, this previous one was working for a while. It's actually very similar to the current one. So if you see here, this was the previous. You see how those lines overlap in specific ways. All the key level supports and resistances are still there. But when you redraw out the Fibonacci retracement levels, you can kind of get perspective here and see where we're at. As you can see, this liquidity grab pushed us all the way down to the lowest Fibonacci retracement at 16,000. So 16,000 we can kind of reaffirm as a likely support level at this point. And of course, there's other ones as well we want to kind of recognize along the way. That said, though, let's go ahead and take a look at some big picture stuff here and just recognize that we're still under 50 on the RSI. We will be for some time. Daily still doesn't look bullish by any stretch. But what we can be happy about here is essentially this momentum here on the actual MACD. It's still continuing to progress higher. Okay, so until it starts to come down and dissipate, so to speak, and we have a divergence, we don't need to really worry too much about it. Okay, so for the moment, we're looking pretty good there in that regard. I wouldn't say it's a super positive, but it's definitely not a negative. Okay, we still have momentum to the upside regardless of the last 5 trading days have been pretty unfortunate or abysmal, however you want to look at it. We still haven't broken through that plane here, and you can see a pretty strong resistance level right there at about the 16,800 range, where we had 3 doji candles in a row, 2 red days and 2 green days. It's really odd behavior in the overall sense of things. We take a look at the simple moving average. Of course, we did get rejected by the 50-day SMA. You can kind of see that here. That's standard. That's pretty normal the first time you test it. And I apologize, I misspoke. That's the 20-day simple moving average. The 20-day SMA is essentially hovering right there at 16,500. So if we can close above 16.5 here in the relative near future, I think we'll be in good shape to kind of be on the right side of those tracks. But for now, we have mostly neutral information on the daily. Okay, because again, RSI is looking bearish, but MACD is looking bullish. Just a general, positive and negative put together to kind of level, even themselves out, if that makes sense. So again, daily doesn't tell us too much. We are pushing to the downside, of course. The likelihood of continuation to the downside is still there, but on the same accord, it really isn't as well if you look at some other things. And what I mean by that is a 4-hour here. Let's go ahead and take a look at that. First of all, and I know you can argue however you want, we're still making higher lows until we close below 15,700. We're still in good shape in this time frame. Okay, while you could argue that the price is kind of coming lower, we're making lower lows and lower highs. That is true. The overall sense of the last week's worth of trading is positive, okay? Furthermore, we want to also look at the RSI. We're getting a bounce off of 30, very, very close to 30. That reaffirms a support level there at 16,150, kind of giving us the reiteration that we are on the right side of the tracks here and that the price shouldn't go much lower. If you take a look at the MACD as well, you can see it's starting to lose its momentum. That is a positive sign too, kind of giving us the indication we could see a MACD convergence in the relative near future. Those are both positive things as well. The last positive that I would like to highlight, because again, when it comes to RSI and MACD kind of giving us some false positives or kind of working each other against each other, or canceling them out for lack of better terms, you want to rely on candlestick patterns and or doji candles. In this case here, this is a form of a doji candle. It is very positive in the sense that we saw this candle wick down here. We've had 2 attempts to try to break this level, and it still can't get past. So 16,150 is effectively a support level, reaffirming itself here. Okay, you can see how it worked previously as well. If you see right here where the price action before it launched up higher, we had this candlestick pattern with that pennant breakout to the upside. Okay, that's what honestly should have happened here, but unfortunately it didn't. But again, that doesn't mean it's not going to still continue higher from here. It just implies that we need a little bit of time to consolidate at this support and break out inevitably. Okay, so again, this type of candlestick really helps us understand that we are generally in a point of, it's a considered like an indecision, right? When you have a doji candle, it can either go up or down. But typically, when you consolidate at a specific level, right above support, and you have a doji candle, that reaffirms the fact that it'll likely go more so up than down. Again, these are just statistical probabilities. It's not like it's going to 100% go up because of this, but it's more so 60-70% probability, you could say. And in that turn, that's how you essentially build a case. And so what we're doing here effectively is understanding what direction it could and should go. Okay, so again, 4-hour time frame. While it still is conflicting for the traditional indicators, the actual candlestick here is looking good. I like to see that here. And they're usually just little things that kind of add up together. So again, all that little stuff together, we're slightly more bullish than bearish on the shorter, the midterm time frame. Okay, so let's take a look at the 1 hour and kind of see what that tells us. I don't think we had any over-exhaustive states. I'm willing to speculate that we are outside of the volume weighted average price lines here and here. That standard deviation kept the price action in place. So we are tentatively range-bound between 16,150 and 16,300. We can very well break to the upside. We could also break to the downside too. You could argue that we are testing this level consistently and that it might break down. And that is a potential. Okay, we got to get that into our heads that that is a possibility. But again, the fact that we've had so much volume in this little area leads me to believe that we are more likely to increase than decrease based on the amount of buying pressure that we're starting to see here now. Okay, again, the price comes down and immediately gets rejected and bounces up off of that level. So again, 16,150 is looking at a very nice support level. So let's go ahead and take a look, of course, at the Ichimoku cloud, kind of see where that tells us. Because again, as I mentioned yesterday, when you're looking at the Ichimoku cloud, you got to recognize that it can give you some false positives as well when it's range bound. Okay, while we are tentatively range bound in this area here, the likelihood of further breakdown is lower because if you see this lagging span soon to intersect with the price action, so another 4 or 5 hours that does intersect, that implies that your short position should be either closed or trimmed. Same thing here as well. We've got conversion line below the baseline. That's a strong bearish signal. But on the same accord, this will start to likely come up and intersect, and that'll shift bullishly in that regard once we do. Now, there's no doubt, of course, that we want to be back up above the cloud, so it will probably be another 24 hours before that happens. But at this point, we are looking pretty good in the overall sense of things. Okay. Now, when I say looking good, I just mean that if you have a short position open, you may want to consider maybe closing that in the relative near future, just based on the simple fact that the price action is starting to lose its momentum to the downside. Okay. Again, no guarantees. The way that the market has been moving lately, you truly never know, but this is neither a bullish or bearish sign. For right now, keep your short position open if you have one, but on the same accord, you might want to be ready for that to stop, because if we were to squeeze and push up above 16,300 and or just say 16.5, there's a strong amount of liquidity at that point, and then we'd see a lot of shorts get squeezed out and the price would launch higher. That is still a firm possibility. So to me, I think it's more likely we're more likely to see something along those lines in the near future versus the price action going any lower. Just again, based on what we've seen here so far. But there is still a lot of conflicting information, and we need to recognize the fact that there is no definitive direction right now that the price wants to go. Let's take a look at the 15 and see if there is anything else that the volume weighted average price is telling us. As I mentioned before, of course, the standard deviation held the price action in place. The price is wavering above and below the volume weighted average price, because right now, based on the amount of volume we're seeing, 16,200 is the support level. All right. We've also got 16,150 as support as well. So in essence, we have more support than resistance at this point, and that's a positive sign. Probably going to be a very similar scenario if we take a look at the Bollinger Bands too. Same thing as well here, where we got that standard deviation, the price action gets too far out of whack and has to correct itself. Right now, we're just kind of cruising sideways. So I'm willing to speculate by the end of today's trading day, we will see some kind of a little bit more volatility, a push either up or down as the markets close, the traditional markets that is, and we can go from there. Keep this in mind too, though. Bitcoin, even though it's been going sideways for a little while, traditional markets are down and dollar index is up. That has a lot to do with the fact that we opened poorly because of the futures. Essentially, they gap down. You can see this gap here, and that essentially tells us that, well, we are tentatively bearish because, again, Bitcoin does follow traditional markets. There's that as well. So again, handful of different strategies and thought processes, but for the moment, I would say hold strong. If you're currently a community member, I'm not worried about our trades. You shouldn't be either if you are following my bear market strategy. If you're leveraging 20% or greater, you should probably be a little bit more cautious and, of course, change your strategy. Because if you are using too much leverage and or too much position size in this market, you're gonna get rich quick, but you're gonna get broke quick as well. Okay, you got to recognize that. I've had a lot of members, unfortunately, they get in with the get rich quick thought process, and they're not there to learn. They're there to kind of piggyback, and that can kind of bite you in the tail. So try to learn from your mistakes if you're making them. We all do. I've been making plenty of mistakes over the years, and I still do occasionally. Right? They're just less frequent because of the fact that I've trained myself over the years to think differently. Right? Less emotional, more data driven, and even though the data can speak in a different direction, it can go the opposite direction too. And you got to be prepared for that. Be ready to lose some money in this market. But all the same accord, be cautious and careful in who you listen to and what you do, and just make sure you make the best decisions possible for you, right? Your own risk tolerance is the most important thing. You got to work within that. So I just ask you to be cautious and careful and continue to be good traders. Thank you again so much to my current community members for just, banding together and all seeing the big picture. I really love that you are learning and growing, and it's really amazing. So thanks again for just being an amazing part of my life, and I'm glad to be part of yours as well. Appreciate that. So if you want to become a better trader, again, CryptoCache.tech is the site, link down below, and make sure you use Bitget if you want to benefit from a $10,000 prize pool every single month. Okay. All right. Well, I look forward to working with you. Hope you all have a great rest of your day. We'll see you in the next one. Take care.